Alrighty, everyone. In this video, I'm going to be going over trading on tilt. All right, so jumping right in, what is tilt? Okay, it is a state of emotional agitation. Every trader is going to struggle with tilt. You must be able to identify it and the causes of tilt before you're able to conquer it. Okay, so trading on tilt, it will lead to poor decision making, and you're not going to be able to think clearly and objectively. Your mental edge is going to be thrown wildly off, and being on tilt as a trader, it's similar to being sucked down by a whirlpool underwater. Okay, you're going to be felt with no sense of direction and no sense of control, and it's a pretty bad feeling as a trader when you go full tilt, and the consequences can be pretty dire in some cases. Okay, so let's continue. We're going to be looking at contributing factors. Okay, so the first one that I have here is a string of consecutive losses. Losing streaks are a part of life. They are inevitable as your career as a trader. Okay, it doesn't matter if you trade on Wall Street. It doesn't matter if you trade at your own personal desk. You're going to experience losing streaks. Okay, they are an inevitable part of life as a trader. And one of the worst side effects or consequences of a losing streak is it can make traders blame the markets instead of themselves. And to take that a step further, what some people will end up doing is they will search for a new strategy for how they trade in the markets. Okay, and that's not necessarily the issue. The issue is almost never going to be how you trade, it's going to be with yourself and your mental edge. Nearly all trading mistakes are mental mistakes. Okay, they're not because your system lacked something. And when traders go in search of a new system, it's only going to compound the problem because you're kicking the can down the road. Okay, no system is perfect in the markets. It doesn't matter if you trade with 8 different pieces of technical analysis, or if you trade with order flow, or if you trade watching price action or with volume price analysis and no indicators, no drawings, no nothing on your chart. No system is ever going to be perfect. You're going to experience losses, and you will eventually hit a string of consecutive losses. And it's when you kick that can down the road and you go in search of a new system, you're still on tilt, even if you don't realize it, and you're prolonging the problem. And you're not trying to work on identifying the root causes of that and how you can fix it and conquer tilt. Okay? Another contributing factor to tilt is overtrading and revenge trading. Okay, traders who are seeking revenge after a losing trade, they immediately want to get their money back. Is that necessarily the right approach to immediately want to get your money back? Is that how the market works? When you, as soon as you lose money, you're going to get it right back? Okay, not thinking clearly is what revenge trading means. Okay, you're not thinking clearly, in other words. You're not thinking objectively, and is the trader's edge present? Okay, if you're focused on revenge and if you're focused on getting that money back that you just lost, is your mental edge there? Is your system, the way that you trade, your strategy, is that present in the moment when you're trying to forcefully get that money back that you just lost? If you have to ask yourself that, chances are, and they're pretty good, the answer is no. Your mental edge is clearly not there if you're basically forcing yourself to, or you're trying to force the market to give your money back that you just lost. And again, this is going to lead to a downward spiral because you're on tilt. And when you're focused on revenge and you're focused on getting that money back that you just lost, you're not even realizing the huge negative repercussions that this can give you. Okay, you can incur a seriously large drawdown by revenge trading. And when you revenge trade, you are trading on tilt. There's no other way around it. Okay. And then last but not least, the contributing factors. This is probably the biggest one of all. From what I've noticed in my personal experience, because we can control string of consecutive losses. We can control revenge trading to some degree. We cannot always control life outside of the markets. Okay, you can control tilt within the market and within yourself as a trader a little bit, right? Because you can know when to step away. You can know if you can identify when you are revenge trading. Excuse me, when you are beginning to overtrade in a single session. Okay, that's all within the market, and you can control that yourself. However, life outside of the markets, you're never all going to be always able to control that. Some examples of this could be sickness or a personal relationship, okay? And that can mean taking time away from the markets, which I'm going to go over here in just a few minutes. Okay, so now moving on to avoiding tilt, okay? And this is a big one. Managing risk first and foremost, okay? You control three things as a trader: your entry when you enter a trade, your exit when you exit a trade, and your position sizing. How much risk are you putting in the market to make money? Okay, are you risking 10% of your account? Are you full porting your account? Okay, are you swinging 90% of your account overnight on SPX options? Okay, you are able to avoid tilt by controlling your risk and focusing on the three things that you can control: your entry, your exit, and your size. Okay, now circling back up here to contributing factors of tilt, and we're looking at a losing streak here. The best way to avoid trading on tilt following a losing streak, in my opinion, is mental breaks. Okay, the market is not going anywhere. The market has been here for over a century. It's going to be here next week. It's going to be here next month. The market is going to be here next year. Okay, the best solution for losing streaks, and to some degree life outside of the markets as well, in order to stop yourself from trading on tilt, is to take a mental break. Okay, if you are having personal relationship issues, if you are obviously suffering from a sickness, don't trade when your mental edge is not there. Okay, the market will be here. There's going to be another opportunity for you to make money, whether it is next week or next month. It does not matter. There will be another opportunity. If you trade on tilt and you incur a large drawdown to the point where you erase 75, 80, 90% of your portfolio, you might not be here next week to take another trade and to capitalize on the next opportunity that the market's going to give you. Okay? Controlling your risk and knowing when to take mental breaks, that can help you immensely to avoid trading on tilt, and it can make sure that you basically live as a trader to trade next week and to have that opportunity next month to make money. Okay, last but not least, having a plan, having structure when you approach the markets. Okay, this will be immensely helpful to you to avoid trading on tilt. All right, what is the market? The market is an irrational environment. Okay, there's no structure inside of the market. Therefore, you must give yourself structure in order to survive. Okay, structure, when you give yourself structure as a trader, it's going to give you the when and the where to trade. Okay, when do you place a trade? When do you enter a trade? Where do you exit? Okay, when you give yourself structure and when you give yourself trading rules to trade by, that gives you the when and where. That's giving yourself structure in a completely irrational environment. And that's how you can really help yourself not trade on tilt. Okay, following your stop losses, always entering a trade with a stop loss, preparing for the worst case scenario. That is giving yourself structure. That way you avoid going on tilt. Okay, accepting the fact that losses are inevitable. Okay, part of that structure, incurring a loss when your stop loss is hit, accepting that fact. Okay, that will help you avoid tilt, learning to accept losses as well. Okay, and circling back here real quick to the when and the where to trade, because having a plan and trading rules give you that. Everything else in between for your when and where is noise. It does not matter to you. Okay, you wait to place a trade before price meets your entry point, and everything before that does not matter. Just like after you place a trade, you're now focusing on where you exit. You enter a trade with a predetermined stop loss. You know how much capital you're risking to lose. You know your drawdown. You know the worst case scenario going into the trade, so there are no surprises. Okay, and knowing the worst case scenario before you enter a trade will help you immensely to avoid tilt. Okay, now moving on to conquering tilt. Staying aware of your emotions. Okay, waking up stressed, fighting with a significant other, your mental edge probably isn't going to be present for that specific day. Take a couple hour break. Okay, come back. You wake up stressed in the morning, if you have a fight with your significant other the previous night and you wake up still upset about it, don't trade in the morning. Okay, the market's going to be there in the afternoon. The market will be there the following day. Okay, there will be new opportunities in the afternoon. There will be new opportunities the next day. All right. Mindfulness, knowing when your system, how you trade, your strategy, plus your mental edge is present. Okay. Knowing when your edge is present is huge. Again, that goes back to the when and where of having structure and having a plan in your trade. Okay. You need to be able to be focused on the now moment. Okay, to channel our inner Mark Douglas and his teachings, focusing on the now moment, focusing on the new information the market is generating in real time. That will help you stay away from tilt because you're going to be focused on the opportunity that's in front of you, not on the possible losing trade that you just took or chasing the missed opportunity that you had yesterday or a few hours ago, and you're avoiding FOMO by focusing on the now moment as well. Okay, last but not least, visualize success. Whether you believe it or not, for some people, positive affirmations will work. If that is something that works for you, I highly suggest that you do it because it will have a positive impact on yourself as a trader to avoid tilt. All right, reading your trading rules before each session, that is a part of visualizing success. Okay, entering a trade with a known worst case scenario for your stop loss, that is another part of visualizing success because you know that when you enter a trade, your risk is managed. You know that you're going to lose an X amount of dollars and you accept that and you're okay with that. And if the worst case scenario happens, which means your stop loss is hit, you move on to the next opportunity and you know the market is an endless flow of opportunity and you pivot to the next trade that the market's going to give you. And that's where your attention diverts, focusing on the now moment, not focusing on whatever happened in the past. All right, last but not least, you want to be able to trade tomorrow. Okay, spiraling on tilt is the easiest path to a large drawdown plus permanent mental damage. Learning how to identify, learning how to avoid, and learning how to learning how to conquer tilt before it's too late is going to be huge in your trading journey. All right, if you enjoyed this video, please like and subscribe. Trading on tilt and learning how to avoid it, the contributing factors, and learning how to conquer tilt. I don't think it's talked about enough in the trading community, so I hope this video helps you in your personal trading career. And if you found value in this video, I would greatly appreciate liking and subscribing to my new channel. And if you have any questions for me, feel free to leave them in the comments below. I'll be more than happy to answer them.